Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it nothing but red because that's exactly what we got this week. We're going to start off with a piece of my ETF dashboard looking at the industry sectors. And I have 16 sectors in here, and this is one of the worst weeks that we've had in a while. There were 0 sectors up and 16 were negative. And when you look at the percentage moves in here, semiconductors down 7.4%. We had 1, 2, 3, 4, 5, 6, 7, 8 of the 16 sectors were down more than 5% this week, with the semiconductors leading to the downside. Now, when you look over here year to date, utilities had been positive. They are now negative. There is only one sector that's positive, and that's energy, up a whopping 60% so far for the year. Yeah, but everything else is in the red, and there's a lot of sectors that are well into the double digits. Home builders continues to lead to the downside. When we look at the indice ETFs, the weakest performer was the transportation average, IWT. It was down 7.1%. Everything else very negative, and NASDAQ 100 down 27.4% for the year. Continues to lead to the downside. So that is the picture. Pretty negative move. Let's take a look. I'm going to come back to this. I'm going to look at this side-by-side view with the Dow, the S&P, and the NASDAQ composite. And let me get this a little bit more in sync. Here we go. The Dow was down 1507 for the week. The S&P was down 207. The NASDAQ composite down 673. So pretty big moves. And of course, starting at about 9 o'clock Friday morning, CNBC was talking about the fact that, the Dow has been down or will be down for 10 out of 11 weeks. And that's how it ended up. 10 out of the last 11 weeks, they have been negative. And it is the first time this has happened since the 1930s, specifically 1932. I think we're going to continue to see a lot of references to the 1930s and the 1970s. There's big changes going on right now. So that is the picture, the side-by-side view. We continue to trend to the downside, but notice how these major indices have not taken out that May low yet, okay? But we are well underway right now. Let's take a look at the Dow versus the transports. We had the big move down in the transports here several weeks ago, breaking down out of this head and shoulders pattern. This is a beautiful head and shoulders top. And right now, so we got the snapback here the week of May 22nd. We got the pause the previous week. And then here this last week, we resumed the move down. This is the lowest close on the Dow Transports. This is 13,368. This is the lowest close since the week of February 21st of last year, so well over a year. So we are heading south, and based on this head and shoulders projection, I think the move's going to be down here at about 10,900. Now, how fast is it going to get to 10,900? I don't know, but based on the price action and the head and shoulders projection, that's what I'd be looking at. Okay, so that is a picture of the side-by-side. They are both in sync in terms of taking out lows and in a downtrend. Let's take a look at the S&P 500 for this week. Let me go back to the home screen, and here's the SPX on a daily basis. It was down 117 points on Friday, gapped down, never looked back, and then just continued to push. Now, on a 30-minute basis, here's what Friday looked like. There's that big gap down. And then we tried to turn midday. This is the 12 to 12:30 p.m. 30-minute bar Central Time. And we started to rally, and then they just slammed it the last 30 minutes of the day, slammed it back down. So, yeah, I think we've got maybe a little bit more short term to go. We'll see how the wave's unfolding here. Here's what I'm looking at. Let me just focus on the daily for now. I'm not going to go down into the detail. I share that with my members. But here's what I think is happening. I think we are in a third minute wave heading south. And what we're looking for is because, of course, in a third wave, it cannot be a leading diagonal. It can't be in any kind of overlap. It's got to be an impulsive wave structure in here. So right now, I think we're in wave 3 of this third wave of a third minor wave down. Now, I may end up, depending on how big this gets, I may end up switching this and calling it a intermediate wave structure. But for all intents and purposes right now, it doesn't really matter. I'm looking at the wave structure and the wave count. Now, when I look at this wave structure here, this wave 1, as compared to the first wave within minor wave 1, this is a pretty big minute wave, okay? Pretty big first wave. So it could be that this one got extended. So right now, if I'm targeting, I'm looking at this saying, well, okay, where does 3 equal 1? Let's just look at that. 3 versus 1. Here's where 3 equals 1 at 33.93. Okay, so now when you think about the wave structures, the third wave is typically the one that is the strongest. It's typically the one that extends the most out of the 3 motive waves, 1, 3, and 5. So this is a pretty conservative estimate, in my opinion, to say, well, we're only going to get to 33.93, then do a little wave 4. So we'll see how the waves unfold within this as we continue to progress to the downside. Let's take a look at a couple of our indicators. I'm going to pull up the put to call ratio. Okay, here we go. On Friday, this is equity only, equity put to call ratios. There were 94 puts for every 100 calls. Okay, the 10-day moving average is at 0.67. So we're starting to go back up. We'd gotten up into the high 70s and then we dropped back down. But in terms of any kind of extreme reading, this is not an extreme yet. We've got 1 day of extreme activity, but we had that back in January also, right here, January 21st, we got 1 day. That's it. Not even close to signaling any kind of intermediate bottom. And just as comparison purposes, let me just show you real quick what like say the first 5-wave move down in March of 2008, what that looked like as we got to the bottom in here. Look at the red. Look what's going on when you had readings of well over 100 puts for every 100 calls in here. And the 10-day moving average got into the 8s and the 9s. We're still sitting here where 0.67 on the 10-day moving average. And we got 1 reading at 0.9 something. So in terms of, extreme readings, this isn't there, but it may be the start of something. So that's where we're sitting right now on the put to call ratios. The percent of stocks above their 200-day moving average, it's kind of a similar story. Let me go and take a look at this view. So yeah, we're down here with a nice low reading, 23.7% of the stocks in the S&P 500 are above their 200-day moving average. Now, we're getting down there, but until I start to see these moving averages get below 30 and get down into this zone and be down here for a little while, I don't feel like we're even coming close to putting in any kind of intermediate bottom. So I've got my eye on that. And again, I've got snapshots of many historical references for perspective, and we're just not there. Okay, so that is the picture there on the percent of stocks above their 200-day in the S&P. Now, let's take a look at another indicator, or actually over in the interest rate picture, the high yield bond fund. HYG down $1.31 on Friday. So after this very sharp rally, bear rally here into the high on May 27th, we just literally dropped like a stone. It's like they just pulled the rug out from underneath this and it collapsed right on back down, signaling risk off. And what has it done? It has taken out that May low. So I think that there's a pretty good chance that this is doing a little leading indicator type of move. This is definitely saying risk off, and this is saying, hey, we're taking out the May low, and we'll see how quickly the indices follow suit. I think they'll follow suit here pretty quickly. So here's the picture on a weekly view, down $3 and a penny on HYG, and it is closing at the lowest close since the week of March 29th, 2020. So now we're back into comparisons of closes for over 2 years ago, not last year. Now we're into 2020 comparisons. We'll see how long those last. Okay, so that is the picture here on HYG. All right, I want to just one of the stocks I love to look at, trade, and chart is Apple, and of course that's a very popular stock. Let's take a look at Apple in here. It's been hard down. Here's the picture. It was down $5.51 on Friday. That's on top of, I think it was a $5 move on Thursday. Pretty big, strong move to the downside. This is daily. What I like to look at, I love looking at my 195-minute charts in here for setups. And right now we're down here. Yeah, we're getting a little bit extreme, getting a little bit oversold. But to me, the picture here on Apple is very much in sync with the Dow, the S&P 500. Make sure I got this right. Yeah, this is it. So yeah, I'm looking at this similar to what I just talked about with the S&P in terms of trending down and in a wave 3 of a wave 3 to the downside. So that's my expectation. This is what we're looking at right now. It's looking and acting like that. So again, what do we do with the Elliott wave pattern? With the Elliott wave pattern, we look at this, we look at the wave structure, and we say, based on what we're seeing, this is the expected path forward. So what I'm going to be watching for is wave structure to play along with this anticipated path, okay? Anticipated wave structure in here. And if it deviates, it starts to deviate, then we start to think, okay, well, what else could be up? What could be an alternate picture in here? But right now, this is the best take that I've got here on Apple, and it seems to be playing according to plan. Okay, that is the picture there. Let's just go back to the moving average view. I can leave you with that. And oh, by the way, I did want to show you, for those of you who love the 200-day moving average, here's where the 200-day moving average sits on Apple. So we are well below that. And yeah, I remember back in March, came down and tested it, bounced off of it very, very hard, came up high, and then we came back down, and here into May, just came right on through that. And so that's where we're set. Right now, we're in a pretty hard downtrend. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a daily basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll see what Monday and Tuesday is like.